All right, hi everyone. Welcome to the Investing in Crypto panel. I'm Alex. I'm a member of Penn Blockchain. And so I guess before we begin and hand it off to the panelists, I'll give a brief introduction of who's with us today. So first we have Albert Wenger. He is a managing partner at Union Square Ventures. He led the firm's investments in Etsy, MongoDB, and Twilio, among others. His crypto investments include Blockstack and Algorand. Albert is writing a book about the future titled World After Capital, and you can find more information about this book at worldaftercapital.org. Next, we have Bart Smith. He is the co-head of the ETF group at Susquehanna International Group, also known as SIG. He is jointly responsible for several ETF-related activities, including oversight of the firm's ETF client trading, global equity portfolio trading, and ETF issuer relationships. Mr. Smith is also head of digital assets and has been leading SIG's cryptocurrency and digital asset efforts since 2014. He is responsible for exchange trading, OTC trading, direct blockchain investments, and working with regulators on the developing market structure. We also are joined by Ron Quaranta, who serves as the chairman and chief executive officer of the Wall Street Blockchain Alliance, the world's leading nonprofit trade association promoting the comprehensive adoption of blockchain technology and crypto assets across global financial markets. He has over 28 years of experience in the global financial services and technology industries. Ron was editor and contributing author of the book Blockchain in Financial Markets and Beyond, Challenges and Applications, as well as a contributor to Blockchain and Cryptocurrency Regulations 2019, published by Global Legal Insights. Unfortunately, due to a scheduling conflict, we were originally going to have Nisa moderate this panel, but she will be moderating or on the Investing in Startups panel later today. So for today, we have moderating Mr. Jonathan Booz, Director of Institutional Sales and Distribution at SharesPost, a regulated U.S. clearing broker and dealer and alternative trading system for trading and custody of security tokens, tokenized assets, and private shares. Prior to SharesPost, Jonathan was head of sales at BitGo, a Palo Alto-based cryptocurrency wallet security platform where he helped expand the sales team internationally. And with that, I'll hand it off to the panel.
There we go. Okay, here we go. Well, thank you, Alex, and thank you for inviting me. I didn't know I was a substitute, so I'll be leaving.
No, actually, you're not. You're not. Just to clarify this, Nisa was kind enough, because it was my schedule that didn't allow. So Nisa was kind enough to switch with my panel. So it's also why you wind up with 4 dudes here. So it's my fault.
We'll settle for you. It's okay.
But thank you, Alex, and thank you for the kind panelists for joining. We want to make this as interactive and enjoyable and productive as possible. There's a lot of information about crypto. As moderator, I guess one of my jobs is to get to know the audience a little well, and of course I have to ask the obvious question. How many people have bought a Bitcoin in their lifetime? How many?
A whole one?
A whole one. How many people have bought a cryptocurrency other than Bitcoin in their lifetime? Okay, so everyone kind of knows a little bit about the space, and I can't believe you all have heard of this thing called the blockchain. It's incredible. What an amount of people here. And we've got a number of discussions here, but I thought I'd open it up with sort of an introduction for each of the panelists down the line and kind of give me the sense of what gets you excited about this space, what's happened recently, and we'll drive the conversation from there.
Well, I think the exciting thing is that the tourists have left. And the people who are actually in for the long journey are the ones sticking around. So, during the whole run-up phase, there were all these people entering the space largely because they thought it was yet another way to get rich quickly. And now I think the people who are in it, who are building stuff, there's still some people in that, but there's a lot of people who genuinely, truly believe that decentralization is an important set of technological capabilities, and that there are interesting long-term things to be built, and that's exciting.
Yeah, I'll echo, Albert, your comments. It's interesting. I've been in financial markets a long time, and I remember the early conversations that I would have with my colleagues in It's almost a legend at this point, or jokes. I think we've all got the same kind of joke. It's meet an old colleague who's involved in foreign exchange or equity markets, whatever it may be, and I can't believe, Ron, you're involved in Bitcoin. I thought that crap was illegal. And I heard that year after year, and it was really kind of disheartening. But
Wait, it's not?
it's none of this is legal opinion or legal advice, nor is anything we're about to say investment advice. I should probably say that out there as well. But I agree with you. This kind of evolution of what's happening in the crypto asset and the cryptocurrency space, and the ability for institutions to really begin to mount the education curve on what does this mean for the evolution of markets? How do they get involved? What are the important aspects of them getting involved? And being in a nonprofit trade association, it really puts us in an interesting position. We don't advocate for any particular crypto asset or cryptocurrency, so we really have access to the conversations about the fundamentals. What does this mean for investment in the future? How do we get access? What does custody look like? How does valuation work? What happens when this is available in retirement portfolios if we're going to go down that future road? So it's a good evolution, and I kind of get the feeling that 2019 is a bit of an inflection point from the perspective of financial markets institutions.
I think it's interesting and kind of on an island, I guess, of how Bitcoin is kind of just tossed into this heap of stupid financial bubbles, right? And people look back and are dismissive of it, and it got to 20,000 because people were stupid, and now lo and behold, it's gone down. And the reality is, like, if you go back and think about expectancy, right? If you think about it from a trading perspective, you know, it did feel like at the moment, and in hindsight, it's obvious that it shouldn't have felt that way, but there was so much momentum with Bitcoin. And if you think that Bitcoin had like a 1 in 20 chance of replacing gold, right, globally, then all of a sudden buying a Bitcoin at $20,000 doesn't seem so stupid. And so I think that because of all of the rash of the fraud and all these ICOs and get, you know, these pump and dump things, I think it kind of led regulators globally to have to kind of like put the brakes on everything. And I think in that moment, I think people look back on the Bitcoin price as being silly, and like as you said, the tourists have left. And now you look at developed central banks all around the world kind of redoing the mistakes they did, you know, in the last cycle that led for Bitcoin to be created. And so that's kind of what has me excited. Like every time the White House, tweets at the Fed that they need to lower rates, I just kind of feel like I should buy a little bit more Bitcoin. So anyway, that's
investing advice.
No. And actually, more importantly, my thoughts are mine and not reflective of Susquehanna's. So that's also unimportant.
We will now read the disclosure statement.
I'm talking to that camera right up there.
I think that the timing of Bitcoin, everyone talks about, and this concept of decentralization, and I think that for most people in the mainstream media, they can't get a handle on the fact that we had the HSBC guy in the panel in the other room, and you often want to ask them, why don't they opine on Bitcoin? And yet, if you look at the amount of fines that banks have paid over the several past decade, I mean, it's staggering. So of course, with an anonymous currency that can help fund terrorist organizations, why in your right mind would you be involved with it? So I kind of understand fundamentally why large established institutions with quote unquote fortress balance sheets and the moat theory, which if you believe Elon Musk is meaningless, it seems to be working pretty well for banks, because if people didn't know, banks made more money last year than on record, and it seems like the Commission is going to allow SunTrust and BBT to merge. And so, the banking establishment in many ways is kind of putting their feet in the ground. Then again, they're huge, so at some point, us little old startups, they can come and just purchase at will. It's a prelude to a question that really, on the one extreme, is crypto, which is basically a technological experiment to a large extent. It's gotten everyone's attention. On the other hand is this concept of kind of blockchain and digitization of assets. Maybe talk a little bit about how you see that sort of spectrum, and do the banks really get involved in crypto, or does it become more of a digital asset play? And how does that evolve over time as an industry, which everyone calls it, emerges to become something legitimate, which makes sense for banks, obviously, to cut costs. And then obviously people want to talk about top line revenue. So maybe we'll go the other way this time.
Yeah, I mean, I guess, people always kind of ask, like, what lessons do you learn from 2018? And one of them, like one of the more somber ones, is that I was surprised at the level that the big banks could influence regulators. right? And they have a history of like protecting their businesses and from kind of the the startup mentality until such point where they have to participate and then they just buy someone, right? And so yeah, I think that they have a global monopoly on moving money. I think the irony that there's been more investigations into banks in the last year about KYC and AML as pertains to OFAC countries than there ever has been, and yet they turn around and talk about this thing. It's like some like dirty little tool for money laundering. So yeah, I think that was the lesson of 2018 for me, is that they are powerful. They have a monopoly on moving money around the world. They make a lot of money doing it. And I don't think that it's in their financial best interest or the interest of their shareholders to allow this kind of freedom of moving large sums of money efficiently and frictionless around the world. So I think that they'll continue to not be adapters of this until such time where it's the innovator's dilemma, right? Like it's such a small thing right now that it can grow, and it's such time that if it does become a problem, they'll just do what Google and Facebook do, and they just buy them.
I agree with you, but I think I'll push back a little bit on something. And you're absolutely right. They're large and they're powerful, and they kind of dictate terms as far as how money flows around the world. And I have to be very circumspect because we have banks that are members. But most banks that we know have an innovation team looking at blockchain to try to understand their strategic roadmap for the future as innovation evolves. I don't know a major bank that's not looking at crypto assets in some way, shape, or form. And it's that uneven evolution. Some of it might be, we still think this is crap, we don't really care, and you can listen to the Jamie Dimons of the world go on for years and years and years, and then talk about JPM coin. So being an incumbent for them and maintaining that position is very, very important. But what I would argue is that they're also not dumb to the implications of innovation. And blockchain and AI and blockchain and machine learning and blockchain and all of this stuff means that the landscape of how they do what they do is going to change. And the worst thing they could do is be caught behind when that happens.
I want to maybe give this a slightly different spin, which is, Bart, you said that the banks sort of have a monopoly on money movement. And I actually think that money movement isn't the biggest monopoly, right? And it's getting more competitive, and you've got non-crypto companies like TransferWise that are disrupting the movement of currency across borders. The biggest monopoly is the creation of money, right? And that used to be the government monopoly. And the banks, who understands what fractional reserve banking is, or who at least believes they have some understanding of fractional reserve banking is. Okay, everybody who did not raise their hand, please read up on fractional reserve banking and how money gets created in the economy. I think if you want to understand the long-term potential for cryptocurrencies for disruption, this is the single most important thing to understand. So what these cryptocurrencies, the magic of them is sort of money creation ex nihilo without the government. And that is the biggest monopoly of all. It's government and government's money creation. So, and I agree with you, Bart, what you said earlier about, 20,000 didn't look silly when you compare it, let's say, against gold. And I think there's a scenario where we will hit 20,000 again and go through it and keep going. And it is in part for that reason that the government has changed the way it's been using its money creation monopoly very substantially during the 2008 financial crisis. So if you look at the Fed balance sheet was lengthened by trillions of dollars during the 2008 crisis. And that wasn't just the Fed, that was also the ECB under Draghi and the Chinese as well. So the amount of money that we've created in the world, fiat money, has gone up spectacularly. And so I think that, you have to take a long-term view of all of these things. And if you take a long-term view, this is the most interesting and biggest monopoly to be disrupted by this technology.
Only at the Wharton School of Business on the first Saturday in April can someone in a panel say, please read up on the fractional reserve banking, and you all start nodding your heads about this place. Someone tweet that. And again, with the vein of audience participation, how many people have used Venmo in this room? How many people think Venmo makes money? How many people have used Bitcoin to make a purchase transaction? Cool. So I'm often at odds with whether or not Bitcoin becomes a payment mechanism, a store of value, / a speculative asset. And more, I think of the latter in the vein of banks looking at how they can use blockchain and this technology to increase operations. I kind of want the thoughts of the panelists in that regard. Like, is it payments and do we use this as currency, or are we more involved in sort of the digitization of assets?
I mean, it's always interesting because when the American point of view of Bitcoin is I talk to people all the time. It's like, well, why do I need Bitcoin, right? And I have Venmo and I have American Express and I have a Chase bank account, and all three of those things actually work quite well for me. So I don't really need a disruptive change for that, but people around the world aren't in that way. Right, and because in China, right, they didn't have home telephones and home computers, they went right to phones, and that became like the first computer that they had. They're very used to exchanging money through WeChat and digitally, much more so than we do here in the United States. And so I have always thought about it from my perspective as digital gold. You know, and I know Tom Dorsey talks about the native currency to the internet, and there's all these other payment things. I just feel like that has so many more hurdles in the United States, but yeah, certainly outside the United States, if you got to a point where people felt like they could store it securely, and you know, and they could use it efficiently as they do other things on WeChat, and then you look at my son, right, who like he plays Fortnite, and like V-Bucks are worth a lot in his world, right, and so he always calls, you know, V-Bucks his Bitcoin. He's like, Dad, I just need some more V-Bucks. It's just like Bitcoin. And he's not wrong, right? It's a virtual world with a virtual currency, and that's really what it is. It has value because he ascribes value to it. So it's kind of a long-winded, complicated answer. It's like, I think of it as storage of gold, you know, an alternative of gold or store of value, but that's because I have all these other things that work really well in my world that Bitcoin doesn't solve a problem for. But outside the United States, it solves a lot more problems. And I think in those areas, they're going to lead to get the real answer. I think the answer to that question lies outside of kind of my ecosystem.
I think the answer, so one of the things we really focus on, we have this kind of digital gold, what happens to Bitcoin story. I think the more important fundamental story that we're looking at is, and I hesitate to use the phrase like tokenomics, this kind of the tokenization of the world and assets around the world. And what does that mean? And I worry about the United States from an innovation perspective and a regulatory perspective. But when you look at Africa, when you look at South America, when you look at global economic activity, particularly for, and I'm deep diving here a little bit, but unbanked and underbanked, for example, the ability to tokenize assets, the ability to leverage a digital gold fundamentally changes the life for billions of people. I think that's the bigger global financial markets investment, and I think that's a bigger global financial markets play, and it's tied to identity in a way that wouldn't be possible without blockchain, for example.
Is that just, this is with the pushback that I get, and I don't necessarily disagree with that, but so Rally Ride is this new kind of startup in New York that basically unitizes cars, right? And so it's a Schedule A, you know, it's a registered investment with the SEC. It's a security. You don't have to be an accredited investor. So the pushback I get is like, why does that need to be on a blockchain, right? And so like, so you can go and you can buy $85 worth of a $250,000 Lamborghini and use it as an investment, or just store it like a Honus Wagner baseball card, whatever you want. And so that's the pushback that we get. Is like, in the United States, there are intellectual property laws that exceed that anywhere around the world, and the protection that the SEC provides in that is valuable to investors. And so that has a liquidity stream that's monthly. It's not daily, but you don't need to put it on a blockchain. So I agree with you that I think the blockchain and the turnkey ICO this week, the turnkey flyer was an interesting one. Turnkey Jet. And that you know, that I think that's an interesting one because it provides a second level of liquidity. Yeah. So there is a benefit there. But again, I think people who would push back on that would say like, okay, but that's great, but like, I don't need it on a blockchain.
Yeah, and look, it's a fair criticism. There's a whole bunch of economic activity that we can talk about where does blockchain add that particular value? And again, for me, I go outside of the United States because I think it's easier to innovate in some of the things that we're talking about. And I go back to identity, I go back to things like that, because on a blockchain, that level of security of identity, particularly when you're tokenizing assets, that's important. But here, may not make sense.
I think these two things are tied together, right, in the following sense. So whenever some new technology comes out, we always apply our existing categories, right? We're like, oh, well, we have categories like gold and payments and so forth. So we're like, okay, there's this new thing. Well, which of these is it? Because that's the way we think about things. But there's another way to come at this and sort of say, well, what does this technology accomplish at its core that we weren't able to accomplish before? And I always come back to it, these things are consensus protocols, right? And they're decentralized consensus protocols. So what they allow us to do, which we weren't able to do before, is to have consensus on something without nominating somebody as the dictator who dictates what the consensus is. And that's sort of a fundamentally new capability. And so if you come at it from this direction, instead of trying to apply the existing categories, then you can think about, okay, with this new capability, what are things that we can build and where does this capability matter? And so I think the interesting thing is it's a classic disruptive innovation, so the Clayton Christensen sense, which is that it's actually much worse at consensus than pretty much all other solutions, except for one category, which is it's decentralized. So like if you have a situation where a consortium works or where a dictatorship works or whatever, we have much faster, cheaper, more reliable ways of consensus, right? You know, like if you want two documents to be synced up, you just use Google today, right? And you know, use Google Docs, and Google is the dictator, and it says which version is current, right? And if you have a problem with that, you can call Google customer support and say, hey, I've got a problem with this. So the consensus in the decentralized world is worse because it's slower. If you throw away your private key, or you know, like you're done for, there's nobody you can call, etc. So it's worse on many, many dimensions, except for that one dimension, which is it does not have a central point of control and value extraction. So I think as we think about use cases, we should always look at like where does this sort of central point matter? And so why is it that Bitcoin is used widely in Venezuela? Well, because the government has hyperinflated the currency, and the government is that central point that decided to mess with the network. And so I agree with you that I think we'll see a lot of adoption in areas where people are rightly worried about what a central player will do to a consensus. And Rally Road is a great example. Like, you know, nobody's worried about Rally Road messing with their car ownership stakes because it's here in the US and, you know, there's a legal system and everything else. So I think Reg A makes perfect sense for today for something like Rally Road. But let's say you also wanted to take Rally Road and have people who currently live in China buy stakes. Well, can they rely on the SEC to enforce this? So have you effectively, with the Rally Road approach, limited the market to the US today? And is the market of buying into, you know, collectible, like classic cars not a global market? So I think those are the kind of, that's how sort of at USV we try to come at this problem, by trying to understand what this new capability is. Sorry, that was kind of a long rant, I apologize.
No, that's fine.
I don't remember your original question.
I kind of want to bring it one more participation is how many people in the audience have heard of a company called Bakkt? Okay, cool. So Bakkt is an effort by a small company called the ICE, one of the world's largest exchange operators, also owner of the New York Stock Exchange. And I say that because when I finished school here, one of the things I quickly realized in this very experienced panel beside me from all different segments and very well put together, I'm going to ask the following question. To me, Chicago always won the derivatives thing. Like, they were just better than New York. And New York won the banking thing. And guess what? California won the Silicon Valley venture startup thing because, like, some ridiculous number, like 40 to 45% of all the money invested in these technology companies comes out of Silicon Valley. And the world has envy that way. But more importantly, we have two big regulators, and they don't teach you regulation at school. It's something that's learned through business. The SEC and the CFTC are very encouraging for people to come to them. They don't want to have to hunt you down. They're too busy dealing with Elon Musk's Twitter account, if you will. And so I find that very encouraging. It's also very obvious and notable to me, and I mentioned Bakkt because they're in the process of waiting approval from the CFTC, the Commodity Futures Trading Commission, who oversees derivatives, to actually do a physical future of Bitcoin, and it will settle physically. I believe it's a 1 day, and there's all sorts of different unique features and stuff, but it's why they partnered with Starbucks, because eventually you would use your Bitcoin at the Starbucks vending machine, and it would create all this. But my question is a roundabout way of saying you have these two large-scale regulatory bodies, and regulation is key to most of this. Why the difference between the CFTC and the SEC, and what's going to change that? What in your experience would drive change and help adoption?
So I think if you listen to the CFTC's public comments, they think that they basically have said, like, we have been encouraging of this technology, we improved the futures. If we felt like there was enough demand for futures in Ethereum or Bitcoin Cash or other things, we would be supportive of it. At this point, I don't think they're apt to do that. I think the CFTC uses every opportunity to remind them they are an institutional regulator, right? They don't regulate retail, and they have no desire to do so. And so most of the consumer protection angle of regulation would thus fall on the SEC, and hence there has been no Bitcoin ETF. So I think at the end of the day, as a regulator, you're supposed to follow your mandate, right? And so they're disclosure organizations. They make sure that people are aware of the risk that they're getting in and they're properly disclosed, and that people do the things that they're supposed to do. At the end of the day, they're political organizations like anywhere else. They're based in Washington. They're basically, congressmen and senators. And, it's at some level you have to put your name on that, right? If you approve a Bitcoin ETF, like Giancarlo very much owned that, and that's going to be part of his legacy, and I think that's a good thing. So I think the answer for regulation is very difficult because there's a lot of scrutiny around it, and at the end of the day, when they approve something, they're going to own it, and I think that is an important facet of this. And as far as BACT and CFTC and creating a warehouse where they'll actually store a CFTC regulated warehouse, like that's complicated. And so I think that should take time. I know we all want it to happen today, in the Venmo Starbucks world. But the reality is that these things need to take time, and we're all impatient. But I think that these things probably should take time to make sure they do it right.
Yeah, we spend, I probably spend an unhealthy amount of time talking to regulators. And you're absolutely right, the CFTC, the dichotomy, institutional versus SEC mandate for institutional and retail investor protections. But one of the things we do see is that we're heartened by is this growing willingness to learn more and understand. 10 years ago, any of us talking to the SEC, they would not have said, come by, tell us about this, help us understand. It would have been get the hell out. We know our regulations, we know our market, we know our mandate, and we don't need to be educated. In some measure, and in fairness, you're right. They're politicians in many regards. But this kind of willingness to understand what does this mean for the evolution of global markets, and how do they keep their fingers on the pulse of doing that? I would not have expected 5 years ago that the Securities and Exchange Commission would have a head of digital assets and digital innovation, and CFTC likewise. And so to me, this global evolution is seeping into the regulators as well. Now, if it seeps into the legislators, which is, if you haven't had an opportunity to go to Washington and talk to legislators, that's a hoot. But the regulators are starting to get it, and they're getting the importance of having their name on it and what that legacy means as well.
I do think it's related to this problem of it not being one thing, and so it's multiple things that span things that historically were different, and so I think that's how we have some of this multiple regulatory agencies all at once. And I do think there's an interesting challenge at the moment where this is truly a global phenomenon, right? And so, if you follow the rise of Binance, which has chosen basically the Binance team kind of travels the world, it doesn't settle anywhere on purpose to not fall under any one regulatory regime. And it's been by far the fastest growing exchange. Now they do crypto only today, but they're going to add crypto fiat at some point for sure. Maybe they already have. And I do think that US regulators also need to think about, to what extent are we behind what's happening globally? Are we leading or are we lagging? And, you don't always have to lead, but if you lag, you can be a fast follower or you can be a total laggard. And I think we have to kind of figure out what we want to be.
I think you bring up a very important point that in particularly I'm I live within kind of the capital markets world, so I think of the world in regulation as far as the SEC and the CFTC, when in reality, just because Bitcoin spans the globe in so many different ways, it's those regulators aren't really, in my mind, kind of front and center. You think about like FinCEN and the Treasury, like this has way more implications for their business, and they are not, people think that the SEC can be stringent, like FinCEN tends to have a much heavier hammer. And so there's the IRS, there's FinCEN, there's money laundering, there's global security risks that go along with this. And unfortunately, if you owned a bunch of Bitcoin in 2014 and 15, like maybe you were Roger Ver, or maybe you were a computer scientist, but there was also people who were moving sums of money anonymously around the world before regulators and agencies kind of figure out how to analyze the Bitcoin blockchain. So I think people focus on those because people are hyper-focused on the price of Bitcoin, and they feel like more financial products will allow a broader group of people to access this in a way that they want to, and that'll make the price go up. But as far as kind of adoption globally, they're kind of secondary, in my opinion, to like FinCEN, just state-by-state regulations, like money transmission laws are very different state by state. And so if you're starting a Bitcoin business, and I know that you deal with this all the time, is registering state by state, and just like the myriad of different rules, and some contradict directly
Major
others.
source of revenue for some of the states.
Yes.
So they're not going to give that one up.
That's right. And so all of that stuff, I think, again, we focus too much on the SEC and CFTC, when in reality, if you really want broad adoption, if you want people to using Bitcoin as a money transmission, or for pan global commerce, it's those other regulators that are going to have to get on board, and they're not on the clock.
That was spot on, Bart, and I think that's why in the end we will need some kind of legislative solution, because otherwise all these agencies will just make this impossible to really do anything.
He's kind of like going around in a very much like uncoordinated kind of policy making that isn't really helpful.
And I agree with Ron that legislative solution is a long way out.
So in light of us being at Wharton, I thought maybe a shout out to some notable Wharton alums, not necessarily the president and the leader of the free world, Donald Trump, but more Warren Buffett, the sage of Omaha and the master of all investing.
Were you?
We are investing in crypto panel planning. Obviously, the stock market's rally over the past decade has a lot to do with buybacks, so Warren's always a little curious about if he's going to trip the 10% rule. And last I checked, I think Jihan owns 50-some-odd% of all Bitcoins out there. Anyway, we're going to move closer to digital securities. I want to get the panel's thoughts. I mean, at SharesPost, I'm part of a digital asset group, which is a startup within a larger late-stage startup. We work with a lot of pretty senior bankers in talking about this space, and they all have one common theme in common, like stop saying token. It scares people. So we talk about digital securities. I want to get the panel's thoughts, and I know we're pressed a little bit for time, so in somewhat brief, your thoughts on digital securities.
That was aimed at me.
No, it's fine.
And we're a market maker at Susquehanna at its core, right? We provide liquidity for people, and we buy stuff because people want to sell it to us, and we sell stuff to people that we don't have because they want to buy it, and then we find it. And so, at our heart, we feel like that's an efficient model, and that people should be able to buy and sell what they want when they want, kind of in a libertarian ideal. And so I want the tokenization of everything, right? Like I want people to tokenize their baseball cards and their wine and their cars, and be able to have the ability to send someone money off banking hours, right? And so I think the construct of these digital assets is super interesting, and we hope they proliferate, and we just want to be there to kind of provide liquidity in the middle and do what we do.
So I agree with you, and we're kind of big long-term believers in the tokenization of economic activity, and the ability to do that in a way that is efficient and effective, much more friction-free than the world we've come to know. I don't think we're going to live in a world of full decentralization where you and I are our own banks and our own hedge funds and we hold our own medical records. I think that's a bridge too far, at least culturally, for society writ large. But there's a lot of opportunity in tokenomics. And I think it'll, in my personal opinion, it's kind of an evolution in the financial markets that we've known, and it's an evolution we haven't seen in hundreds of years. I think it'll fundamentally reinvent how we do what we do in global markets. Now we just got to get the legislators to understand what the hell we're talking about.
Second that.
So a few more minutes for questions. Does anyone have any questions? Yeah, first guy.
Hi, panelists. Thank you so much for your time. My name is Ivy, University. My question is regarding investing in privacy coins. So a lot of the discussion has been about regulation. I want to understand, like, how do we evaluate from a long-term perspective coins like Monero, Zcash, like any ideas on that?
Well, I mean, Bitcoin could be upgraded to a privacy token, right? It's just a changing of the algorithm. But yeah, it's an interesting question. It's a great question, actually. You know, and there's one other regulator or agency we didn't talk about, and that's the Federal Bureau of Investigation, right? And so like their financial crimes unit has a very vested interest in being able to identify money flow around the world and to enforce the laws of this country. And so that provides like a kind of a real dilemma. I don't know the answer. I don't know that anyone definitely has, but you know, when they're aware that those things exist and how that technology coexists in a practical world is a great question. I don't know if you have an answer for that.
Yeah, you're absolutely right about FBI and DEA and all of the others, but and don't doubt that they were already leveraging and creating tools to track some of those flows as well. I mean, you know, anonymous isn't invisible, and they get it, and they're working very hard to fulfill their mandate. So, but to your point, I don't have an answer, but it'll be interesting to see where that goes.
It's a very interesting question.
Well, I think that you asked about the question of investing in it. I think there's a sort of question of can you make money by investing in them now or not? And then there's a separate question of what is the regulatory implications? And then there's a separate question, what is the philosophy and ethics of privacy coins? And I've known Zuko for a long time before he even got involved with Zcash, and we had a lot of discussions around this. And Zuko's point was that his criticism of Bitcoin was that it lacks true fungibility, because what if you have some Bitcoin that were previously at an address that was controlled by some Russian oligarch, and the Russian oligarchs, people show up at your doorstep wanting his Bitcoin back, and that fungibility is a key aspect of making a currency work. The other argument that people have made, ethical argument people have made in favor of privacy coins is that if you live in a cashless society, the state, the government just has that much more power over all citizens. So I think people who have a sort of super facile ethical takes on privacy coins just say, oh, definitely bad, should spend more time talking to people. I'm not saying it's definitively good or bad, I'm just saying it's a more complicated and nuanced discussion than I think some people make it out to be.
Go ahead.
So something more recent, right? There's a lot of talk in financial markets right now about the inverted yield curve. My question to you is, in your opinion, what does that portend for adoption of digital assets and cryptocurrencies?
Yeah, I mean, again, it's right. So like, it lends itself to being historically a decent predictor of recessions, and I made a comment of this earlier. The bailing out of banks was obviously in the first mine Bitcoin, right? Like that reference to that British news article, and so I'm not rooting for another crisis, certainly not. But if it doesn't seem like people learned their lessons, right? And people being broadly governments, and so if there was to be a recession and there was to be inflation, and all of a sudden you have governments who are literally hammering to their central banks to behave in one way or another that fits the policy that they want, that's one of the main tenets of why people wanted to have a currency or an asset that they could control, that they could use to pay other people, that was not associated with government. So like, we'll see. I mean, the Fed's decisions in the next 6 months are going to be very interesting to watch. I'm not an economist, and I don't play one on TV.
But that's an interesting point, right? I mean, the inverted yield curve being a harbinger of potential economic slowdown. At a practical level, though, what's the UX for getting people involved in crypto if they all, in mass, we all decide, we really need to insure ourselves against the next economic downturn, and I want to buy Bitcoin or Ether or whatever it may be. I still don't know that we're at that point. Like, what's the endpoint access for people if the mass of general people in the United States decided they wanted to hedge a little bit and get some access to Bitcoin? We're going to point them to Coinbase? We're going to point, what do
Well, yes, definitely point them to Coinbase.
Right.
No, but Robinhood and Square and like it's happening.
You can buy it there.
It's going to rattle off his entire portfolio for you right here, right now, at the Wharton School, okay? Not that you should invest in those companies or buy their products and
This
services.
is investment advice.
No commercials on my panel. One more guy in the back. This guy's been raising his hand all day.
I had a question for Bart about the so-called tokenization of physical assets and whether or not you believe the value in merging the digital world with the physical world is justified in terms of all the infrastructure that would have to be built out to merge those two.
Well, the whole idea is it's distributed ledger, right? It's just like a fancy spreadsheet, right? Like if that's the thing that people are always like, well, I don't like Bitcoin, I don't like blockchain. And you're like, well, that's kind of stupid because like all the blockchain is just like a really fancy spreadsheet, right? And so there is, going back to the rally ride example, it's like I can't take that with me, right? So like putting something that's digital that I can control, that I have the keys for, that I can. If the United States totally goes sideways and I want to move somewhere else, I can bring that stuff with me, and that seems like a silly thing to say, but there's people around the world who can't do that, right? Like when people are refugees and leave their country, they have to leave everything behind because like they literally can't carry their gold with them, and so on one hand, I think it's in the United States from a capital markets perspective, I don't think it's super warranted right now. I think it's like a nice add-on to have. It provides kind of new marketplaces. I think the next generation of investors are going to be way more likely to find that useful. But as it stands today, like there's nothing you can't put in there that you can't put in some other vehicle that is effective way to invest in it. But I think if you look out 10 or 15 years, I think that this type of activity and this type of commerce is going to be commonplace. And either it's going to happen here, we're going to have a regulatory environment where we encourage that and we that fosters here, or does it find another home? And the interesting thing is, I've asked this question all the time when I go outside the country, which I do kind of on a monthly basis. It's like, where is the crypto hub outside? And like, no one's kind of stepped up. Like for a while, you thought it would be Japan, maybe it'd be Zug. You would think London would be a natural hub because it's such a global. But like, it's basically the Seychelles, right? Like, there is no hub outside the United States, and I think that'll be where. That city that steps up and says this is going to be the global hub for tokenization will answer your question probably more succinctly.
Not Malta?
Or Malta.
Just a question for Alex. Do they teach a blockchain course at Wharton now?
Yeah, we have like a mix. It's for it's pretty interdisciplinary.
Okay. Over lunch, you can grab that professor. I just want him to say again, it's just a fancy spreadsheet. That professor, that would be awesome.